Howard Lindzon is the founder and general partner at Social Leverage. All opinions expressed by Howard and podcast guests are solely their own opinions and do not reflect the opinion of Social Leverage or StockTwits. This podcast is for informational purposes only and should not be relied upon for decisions. Guests may maintain positions and securities discussed in this podcast.
Hey everybody, welcome to another episode of Lindzanity. Today in the studio, Doug Horlick, ex-Goldman, ex-Bank of America. You know what? Just ex-banker, an all-around good guy, golf fan, an LP and social leverage fund, and we're going to talk a lot about the markets and the old world of currencies and banking and the future. Welcome to the pod, Doug.
Thank you. Thanks for having me.
Goldman bump. All right. So everybody, welcome to Lindzanity. And it's pretty simple, the show. You just have to be Doug Horlick.
I can do that.
And I got to drive this beast of a conversation that we're going to have about banking, Forex, the markets, machines.
Good.
2008, because you were there at the epicenter.
I was there.
And the future.
Great.
And you have 3 Gen Zs yourself. So.
I do, and I'm looking forward to it. Thanks for having me.
All right. So with me today, everybody, is Doug Horlick. Recently, maybe the latest person that I know from Wall Street to have joined Twitter. You joined when?
I think maybe 2 days ago. Some peer pressure on your part, I think.
So you joined Twitter. You're the last guy on. And what's the experience like joining today? Is it easy to figure out how to use?
I think...
You followed Ricky Gervais. You said that was a mistake right off the bat.
I think, yeah. Well, I watched that one show and I followed him, and then I realized that 700 tweets or tweet likes later, I wasn't going to see anyone else. So I had to drop him and get other people on it. But I think it's pretty self-explanatory.
So
Very cool.
I think what's happened, as I said to you, is now it's become about marketing. Even maybe he was good, maybe he wasn't. I mean, I think the show we're talking about is Afterlife, which I think is the best show of the year.
By far.
So if you haven't watched it, everybody, Ricky Gervais, I think this is tour de force.
And it's quick. It's quick to watch, and you hit every emotion in 25 minutes, and you turn it off, and it's great. He's brilliant. Yeah,
I think it's the most brilliant show I've watched in years. And I'm not a huge Ricky Gervais fan. I mean, I feel like the old Office doesn't hold up as well as... You know, my daughter watches the new Office with Carell, and she just giggles if she watches it 100 times. I think Afterlife is the type of show you could watch 50 times, and just his inside jokes and the way how dark that show is great. So high recommendation for that. So let me give as short a background as possible, and then you'll clean it up.
Yeah, sure. And
what I have is... you kind of dropped off the grid, at least on the banking side, in 2014. You were running of the herd. You were the head of FX institutional sales at Bank of America, correct?
Yeah. So I ran FX hedge fund sales in Americas at Goldman for 5 years, and then I switched over and ran the Americas at B of A for another 5 years, and then I dropped off the map. Then I did consulting, moved out here with the family, extended family. Met guys like you, and that's the last decade before I dropped.
And so, being dropping out of the way you have, how hard? Because there's a lot of people that are going to have to drop forced out, or like you did, just leave, saying, I smell that the party's over, machines are taking over. So what was it like in 2014 when you left?
I looked after sales and foreign exchange was an interesting cat, to the point where it was very, very easy to electronify. So let's put it this way. Let's say we'll rewind 1995. I get to my first bank, a Dutch bank, ABN AMRO, and you're looking at dollar mark and dollar yen at that time that was 10 points wide.
Even
10 points wide.
Stocks were massively wide, but that's a huge spread.
10 points wide.
Okay.
Then all of a sudden, I lose over a dozen currencies overnight, and the euro happens, and you think, oh, your world is over. Liquidity increases.
So what year was that?
Yeah,
the euro was 90.
The late 90s.
Okay.
So that jumps off the map, and then all of a sudden, this e-commerce thing comes around. it's new tech, and fintech doesn't exist at that point, and banks don't really care as much about technology as they should. And all of a sudden, fast forward to 15 years later, and every single one of my clients had better liquidity than I did.
Explain. I don't fully get
So
that.
I get to the point where, I have full control, me and let's say 15 banks.
Mm-hmm.
Set the price at 10 wide in dollar yen.
Mm-hmm.
And then all of a sudden, because technology moves so fast, the price in dollar yen is 0.1 wide.
Wow.
Not 10 points wide.
Who's making that market?
Every bank and every third party and every broker and every person you can possibly find is getting a liquidity
Legally?
source, aggregating, and streaming it. So a hedge fund that I might be talking to could see an inverse price or a choice price.
Yeah.
So when they ask me on 500 million euros, there's just as good a chance that I'm going to lose money than make money because they know where the market is better than me.
They're calling you even though they kind of know where the market is?
Well, you'll call a bank on that kind of size because you might be able to transact 10 million, but you can't transact 5 million, 500 million on it.
Mm-hmm.
So technology was such a great thing. So I went from all it was I had to hire and I had to try to get the biggest high-touch accounts that did huge options and big liquidity moving events to, my electronic desk was pretty big when I left, and I bet it's bigger than the terrestrial desk now 5 years later.
So, and how many people would be there now versus at the peak?
Let's say if a New York trading floor for currencies had 25 salespeople, it had 0E, then all of a sudden it had 2E, then it had 5E, and I bet it's probably 50-50 now. But the 50% non-electronic salesperson probably has to have an excellent electronic skill set still because they have to know both because it's become so prevalent in the business.
And so why Phoenix?
My family lives here. My parents retired out here a long time ago. My sister lives out here. My brother is married with 2 kids. We spend tons of time with them, and it was like move to Chicago, get another big boy job where my wife's family was, or move here, weather's better, do some consulting, advising, and kind of look at more of the fintech side, and the weather and my family won.
Yeah, so same, but and how do you like Phoenix?
I love it. I mean, it took a while to get here. It took probably 6 months.
Yeah.
6 months before you're like, wow.
And it's
this
different.
is different.
It's different.
Well, there's no one like you here. There's no one.
I don't know if that's a compliment.
No,
yet,
I'm not sure either.
Yeah.
I'm not sure. But in
Fair.
a half hour when
Fair.
the time goes up, we'll know.
Yeah, fair.
And the interests are a little more eclectic, more a lot of real estate here, a little less finance. I came from New York where, finance had 500 different aspects, and here. I don't think most people, differentiate between, the hedge fund guy and the bank teller. And if you're in banking or financial advisor, that's cool. Good for you.
And so now I know why Arizona. Do you still trade on your own, or how do you go from that kind of job to golf and kids? So what are the vices on the way, like a day like today? So it's what's today? It's May 12th to 13th. So the S&P had a huge down day today.
Thanks for pointing that out.
Yeah, we're not.
This was
contextually, we don't like talking about the markets here. We'll talk about big trends, but because this may not air for a week or two, it won't matter.
But we can talk about a little bit the psychological implications of something.
So
like
today
that.
the S&P closed at 2,800, which may mean something to people and may not. But that's a nasty day.
Yes.
And Bitcoin, I think the other interesting story now, and we could talk about that quickly.
Yeah.
Is it hit 8,000 today? It was 5,000 a month ago, and it's 150 billion. Okay, so what was this story you were just telling me about China? Like, because of this tariff stuff,
whether it's a rumor or not, let's stir back. Some of the things I've done are crypto related, blockchain related. So I've tried to stay close to that market a little bit. So the rumors when I woke up and the market was only off, let's say the Dow was only off 550 at the time, not 700, was, given the Trump comments and tweets, that some Chinese nationals might have been a bit nervous and diversifying into Bitcoin. Now, whether that's legit or not, I have no idea.
It's a hell of a good story.
I don't have a position. It's a great story, and I guess that's really all you need in something that
it's relatively thin for a nationalist to have to trade.
But I think in Bitcoin, I think the problem with differentiating a real move or not is people getting confused between liquidity and volume.
Okay. And you would know something about this because
so just because it's volatile and it's moving doesn't mean real liquidity is going through.
Right.
I mean, we saw that in the flash crash with all the high frequency guys. It's great they're giving liquidity at the time, but are they giving liquidity when they need to give liquidity?
Yeah.
So I don't know how much is transacting. I don't know how much. I mean, we were having lunch. I'm not sure how it closed or if we could see the volume overall, but that's an issue.
Yeah.
And that's an issue for, I think, everyone, even though something like Bitcoin and just the blockchain technology offers so much value. Getting a handle on or at least everyone being able to see, if it was centrally cleared, that would be easy.
Yeah.
But given it's esoteric, it's everywhere.
Kind of like
it's tough to tell.
It's like e-commerce, just everywhere.
It's everywhere.
Okay, so I do have a lot of stuff to go over, but the first thing is you were. So you wake up today, the market's down 3%. Let me just get to the question before I completely hop off. You wake up today, you kind of see that there's something interesting going on in the market. What are the tools that you use today to just get the Jones of feeling like it's the old days?
Get the Jones of feeling it's the old days.
You want to put on a trade. You're not going to trade massive size.
I will
what do you
bring
do?
up my account right away.
Uh-huh.
I'll turn on my iPad and turn it on CNBC, whether I listen or not. That's fine.
Uh-huh.
Yeah, I don't mean to gag you.
Uh-huh.
I'll listen to Bloomberg driving in.
Uh-huh.
I will make kind of 2 strategic calls of old clients that I know are sitting in a padded room like me in different areas of the country just to get their temperature because they're not huge panickers and they are also not as exposed to a downward sell-off as I am because they're usually a little bit more hedged and a little bit more quantitative. So I'll kind of get their temperature on what the volume looks like and how it's different just in their voice.
About the S&P or currencies?
No, I don't look at currencies
Okay, got it.
ever.
So the
I looked
S&P.
at currencies maybe the first year that I left.
Got it.
And then I decided that
Even though you were doing
I
FX?
had no interest. Yeah,
Even though you were doing FX, that's hilarious.
Yeah, I mean, and it's the good thing because nothing's moved in like a decade, so I'm glad I focus. When something can move 30% in a half an hour, it's tough to focus on currencies.
Got it. And so you make those calls.
Yeah.
But generally it's pretty simple. The same go-to kind of stuff.
Same go-to. It's just I don't have the same technology, so I don't have 30 screens in front of me. I don't have Bloomberg.
Do you miss it?
I don't have 30 guys. No. No, I miss the people a lot. Like the trading floor environment was a drug. Yeah. It was, there was no hiding. It was like, in sports where, your numbers are posted and, if you went 0 for 16 or whatever it is, you're going to see it. Uh-huh. And there was something very, intellectually honest about the whole process. And
intellectually honest to you, not to the outside world. We never trusted any of that stuff. But inside,
well,
baseball,
inside, like let's face it. Like it was, I worked at a lot of tremendous banks and tremendous shops that I'm sure looking back made mistakes or whatever it is. But I never saw anyone like, we probably had 200 regulators in our building by the time I left. It's not like it wasn't policed.
Right.
And my business.
Good point.
And my business specifically, it was pretty kind of cut and dry.
Yeah.
I used to tell people, don't overcomplicate it. You have a bunch of lights in front of you, and you want them to blink here and not at another bank. Mm-hmm. So add value.
You understood the customer side. That's why you were in charge of it.
I think I was the customer in a way. I had to protect the bank, but in the end, you are a voice of the customer.
Yeah.
And that's what I miss doing. I miss the negotiation between salesperson, manager, trader that executed my business, client over the phone, boss who may or may not have understood the real time of it because he or she had a lot on their plate in managing other things, and that all in a wide open space where you can't hide. There's no office, there's no anything, is a rush. And
you don't necessarily know when the next rush is going to happen.
Well, I've had a real problem finding that.
No, I mean it's in the job.
In the job, no,
you
not
never
at
couldn't
all.
predict. You just had to be on call.
Yeah. You know, I would get to work at 5:30 every morning
For 20 years.
for 20 years.
Yeah.
Yeah, and I had to get there an hour and a half before my clients,
Mm-hmm.
and so I knew what was going on. And someone in London would call me and tell me what happened overnight while I was sleeping.
Mm-hmm.
I would read the Singapore or Tokyo update, and I'd kind of be up to speed. I'd read a piece of research maybe our specific bank came out with, and then I'd go to work.
So you had no time for anything else.
Not really, no.
Yeah. So you don't miss that.
No, I don't miss that at all.
So let's walk back to the one point in time because there's some great stories from 2000. So we'll talk about the future, but let's go back to 2008. Seeing that you were there, and I don't have that many people that I know that were there.
Yeah.
Walk me through being at Goldman when all the other banks were crashing, and in what was the worst month? What was the worst of it? Do you remember?
It started. I know what the worst of it was. But it started in the summer of 2007 when they had a couple of mortgage hedge funds. They started showing cracks.
Okay.
And I was far from a mortgage expert. I had no idea what was going on there. But some of my clients were super savvy, and they were like, this is a problem.
Okay.
And then they kind of went away. It
Yeah.
was okay. Everything was happy until, early
January 08. I
2008.
remember I got cracked.
Yeah. And then that got hit. Then we came back again.
Yeah.
It was happy go. But, September 14th, 08, my life pretty much. Like the fun of the business, and you can unpack fun any way you want, but the exhilaration and the risk reward and the excitement and all the reasons I did it materially took a dive.
And I'm on the outside cheering for the demise, even though it's stupid.
I understand.
Even though it's stupid.
But that's
We were
no
watching
different.
Bernie Madoff hiding out in his apartment. I mean, this is what we were watching.
Think about that. That's no different than like half of society rooting down, being thrilled when Tiger Woods sucked, only to be even happier when he came back up, or rooting against LeBron because he's on the top. You see all this stuff. Everything's there. Why should they be able to differentiate on a trading floor between the mortgage desk and the currency desk and the rate desk or equity desk? I don't know. I didn't know what they were doing either. Mm-hmm. So I totally get it.
Yeah. So the 14th, you come. So what was going on in September?
So I was actually in Summit, New Jersey, at my son, who turned 18 years old Saturday, at his soccer game, and I got a call from the partner that ran my area that said, get your ass in the office. And I went.
And the office was where?
In
Jersey?
New York.
Oh, in New York. In Manhattan. Okay.
In Manhattan.
Yep.
So it was, at the time, it was downtown. And I got in the car, said nothing. And later, my wife told me that, 12 other people
got the call.
Got the
soccer
call.
game.
Like I think the ref worked at the Fed, and it was just this mass exodus to New York. And
was that on a Sunday or something?
It was on a Sunday.
Okay.
And I don't really recall coming home for a few days.
Wow.
And it was I think, and this sounds weird. Nothing ever really happened like that before. Right. So when that, and I won't be specific with the banks, but the banks I've worked at, and at the time, the leaders were brilliant, and brilliance with pure intelligence in, on the organizational behavior side and intellect, but also experience. But no one had ever seen it, and no one knew what to react, and no one knew what to okay, Lehman doesn't exist now. Okay, so every trade.
So that Sunday, Lehman had just.
Yeah.
So just give me a little bit of context again, because I was there, but I don't remember already.
Sunday night, Monday morning, they opened up and were like, Lehman's done. Okay. So basically, every trade that we had with Lehman doesn't exist anymore.
And that was why you got called in.
Yeah.
Okay.
So I wasn't a trader. I wasn't handling our risk, but I was there because clients were calling, and and some at different levels of panic. And I, this is what I do: pick up phones and make prices and talk to people and try to get a sense of what the market's doing. And it was super fun because I had no idea what was going on. It wasn't really scary until midweek when you realized what was going on.
Because Goldman stock was down to what at that point? Down 50?
I don't know at
it was
what
down
point.
to $50?
So it went down. I think it was on a 48 handle at the low from like 200 something. And I remember actually because maybe Sharky or whatever it is, but I remember this was an opportunity for me. I could interview people. So I remember interviewing someone at a coffee shop from Lehman outside the trade.
Oh, because you could just get good people.
Yeah.
Yeah.
This was an opportunity.
Yeah.
This was, it was. So I remember being downstairs at a coffee shop, not far from my desk, because I felt like I had to come back. And while I was on the phone, I was checking, while I was talking to her, I was checking my phone. And I saw Goldman go from like 89 to 87 to 82 to 78. And I basically just wanted to puke in a bucket.
Because you were tied to Goldman.
And I called it. Like, I was like, listen, you're lovely and very quality. And, I couldn't say anything more. Like, she was
stressed.
at Lehman. It wasn't as if that, but it wasn't if I'd get sympathy there.
Right.
But it went from, my first piece of good news, I remember it now.
But did you think it could go to zero those few days?
Yeah.
Yeah, because Lehman and Bear had already gone to zero.
Lehman and Bear had already gone to zero.
Or basically Bear.
And Morgan Stanley didn't look good.
Right. Morgan Stanley didn't look good. And
you just didn't know.
Were you guys watching CNBC too? I think you told me one story where you're watching and Lloyd standing in the same room, even though everybody's thinking he's in Washington.
No. I think I think everyone was like, everyone's in Washington trying to cut deals. And management was there and totally in control and totally knew what was going on, and that was silly marketing nonsense. Like,
so do you watch CNBC today, knowing that even then they just weren't doing? They had no idea what they were doing.
I think I watch CNBC for different reasons than other people. It's not like I'm getting my trade ideas. I want to see where the market is.
Got it.
And like if they have 10 guys on, maybe one of my good friends was on last week at the Sohn conference, and I never would have known that he was there giving a speech if I didn't have it on.
Got it.
So they cover those.
That's kind of your social network in some weird way. But the filter is just
so I've never
whack.
been on any kind of technology that going back to your first comment, like I've just been on it 3 days, but Twitter does a poor job to market to me. Like, that's the greatest information hub of all time.
Well, I don't want to get going there.
I think it's just
a sad disaster.
I think it's unbelievable, and I think I group it with all the other tech bullshit that I'm not on, rather than, oh no, all these people don't have to be my friends. I don't have to friend my friends.
Right.
I can just get all my business news, my politics news, my sports news, all in one place, and it's awesome. Even if I don't tweet any, that's an.
But you got to do it all yourself. You don't have some group of people setting it up for you like you did back in the day.
That's
why I loved it.
Right.
That was my edge for
right.
10 years. The fact that you in 2019 are just setting up Twitter. And I know this about much based on how much you know.
Right.
That was what made me. That was my moment in 2008 saying, "Oh my God, Twitter's going to change the world." I finally had an edge over everybody in your business. You guys were watching CNBC in 2008, and I was investing in startups. They're watching CNBC. I think CNBC has no idea what they're talking about. You're confirming it was fake news at the time, or at least they didn't know anything.
Well,
because
I don't know where it came from. Maybe it's as silly as our conversation about why Bitcoin is here, and maybe that's irrelevant. Who knows?
But I'd rather have those conversations with a group of people that I know than listening to strangers spouting at me. Meaning
I have
the
no
fact that
problems
you've
with it.
digested that news and have not dismissed it as fake news, and you're not like a promoter. And I just see Bitcoin up, and I'm like, okay, it makes sense to me that it's up because of these things. And then you confirm it with that story, and that story just kind of is possible.
Yeah, but on the other side, on CNBC, a lot of the people I see or on Bloomberg, I knew at the time. Yeah. So they weren't like complete strangers. Not a lot of them, but a couple of them. So it was comfortable. But I didn't have time to watch TV.
So that few days passes. And when did you know? Was there a point where you finally said, I can breathe? Like
8 days after. 8 days after.
So 8 days after.
I was at a gas station coming home from work at I don't know what hour. I don't know how I stayed awake on the ride home. And, I was just happy I got through the tunnel, feeling my heartbeat, listening to Bloomberg radio. And they broke in to say that Buffett gave Goldman like $5 billion and warrants and all that kind of stuff. And I didn't care what he paid or what he got. It was just a brilliant move. And that ended up
And that was in October or March? That was in September?
That was still in September. So it wasn't the dead bottom, but
it wasn't the dead bottom.
That was pretty damn nice.
But he's in for 5. He's going to be in for 20.
Yeah, who knows? But the perception there meant more than.
And then he did the New York Times article or whatever that the market's bottomed.
Yeah,
and he was a little early, but he nailed that.
So nonetheless, I think that was it. But it didn't stop for the pressures and the fun. I always tell people I was reason I got in the market. Let's go back to Michael Lewis's first book, Liar's Poker. I read it and I was like, I'm doing this.
You were in college and you read that?
I was like, I'm doing this. This is what I'm doing, and no Dallas equities. Yeah, I didn't miss an equities run at all. No. And I was like, it's going to be fixed income. It's going to be this. It's going to be that. I'm interviewing at Solomon Brothers. I want this job. And all the reasons I wanted didn't exist in the middle of 2009. So I thought it was the coolest thing in the world. I thought, I wanted to be, I loved hedge funds. I loved options. I wanted to be in sales. I wanted to do it at a top bank. I wanted to do it all of these things, all of the reasons I got into it didn't exist anymore. I was the enemy. There was this TARP money. You specifically blew me up, even though I didn't know what was going on in mortgages. Like all of it kind of crumbled down. Like the cool factor of why I got there in the morning, why I practiced, and why I did
cool. Not cool.
Yeah,
that explains everything.
So
that's when the industry died. They could say Bitcoin's changing everything, but the industry died that day.
Just to couple it with your stuff. When I started, I didn't think I would lose ever a recruit, like if I went one-on-one with them. Like I was recruiting against 2 or 3 banks. When I started losing. At
Goldman or
anywhere. Yeah. Let's not get specific with, but let's say I was recruiting and I got him. I got her. And then all of a sudden, I started losing them to Google.
Got it.
I was like, what?
Got it.
I was like, how did that happen? And then all of a sudden, 5 years later, 90% of the Harvard grads were going to Silicon Valley and they were not going there. And it just changed. And it was
brain drain. It's not so much a brain drain, it's a brain switch.
And to a degree, not to sound silly, but like the reason why I think I was okay at sales is I believed my own shit. Like I really believed these kids that were the smartest on the planet, and they were supposed to be working next to me, and it was the best thing for them.
Well, they were doing that.
And then it was disingenuous to make that argument because I didn't believe it.
Okay, that's awesome. And that is the truth. And that is the only thing that can kill Facebook and Google is the brain drain. Like when the kids start going somewhere else to work, unless the machines are fully running things.
And that's why fintech, it took me a while, but that's the perfect thing. The stuff that you're in is, okay, I wanted to run as far away from banking as possible. Let's go 2,500 miles away from New York. So there's no way I'm getting pulled back because I don't trust myself and run away from it. And then I realized, okay, like, maybe what I learned
you have so
over
much
the years
offer.
is
This
fine.
is why I knew it would be fun you could be a regular in the sense that I think it's a dinosaur. It's not coming back. The brains are never going to switch back. The electronics won.
Yeah.
You
They
can be
won.
a great salesman, but you can also be a great salesman in an enterprise software company and not have the stress.
Well, even the trading. Look what it did with the trading. Like I told you, we talked briefly about all the reasons I got in the business didn't exist anymore. One of the best prop traders I've ever met in my life told me this thing when I was 25. He said, Doug, if you sit down and you have 10 trades on and you look at a trade and you got in it for X number of reasons and those reasons don't exist, if there's liquidity, get out. You didn't get in it for that reason. And computers are so much more, ready to trade on fact-based things when emotion can get out of it. That's why most of my clients that were macro, that were feel, that or whatever it is, struggle to outperform a passive indice. Same thing, you know. I gave you my example on the career side, but it's very similar on the trading side.
And so you don't think there's much alpha there on the street?
No, that's why I'm friends with you, because I truly believe there's three asset classes: cash, the S&P 500, and privates, where you can make value. Like your whole VC animal, I think is phenomenal.
So I kind of agree with you. I think cash is interesting. S&P, I agree. I guess it's S&P or basic asset allocation, 60-40, 70-30.
4. You throw some bonds on there. But all I'm saying is yes, do I think I can outperform on a one-off if I really know something? But, like, it's a public market, and if I could significantly outperform, that would be weird.
And is that good or bad? I mean, it costs you not your job because you're a smart guy. Like, you left on your own volition.
Is that good or bad? I don't know yet.
Okay.
I don't know yet on the fact of you know, we haven't had a significant. What have we had, a 10-year bull market with a couple of dips?
Yeah.
But we've gone straight forward. So I don't know of a consolidated sell-off, what that will mean to all the passive, all the ETFs, all the volumes. How will the credit market shake up? How does it all work? It sure seems like it's going okay now. And it seems like banks have lots of cash to support things. And even if things get a little pear-shaped, I think they're in a good position to soak it up and be like that. But I don't.
You don't see what the next thing is.
What is
what's on page 10 that we're not seeing?
What is the basic proverb of you know, the fact that the U.S. does the best job ever at destroying jobs. The only thing it does better is creating them. So, like, you know, I don't think the 20,000 jobs that were getting paid to push active management or whatever it is will be missed.
Yeah,
it's
fascinating how
if
fast.
I had 3 physics PhDs working for me at a bank that were going to do my quantitative analysis, and now they're working in biochemistry to, you know, split some atom that I have no idea. I don't know if society's in a worse shape that. And so I don't know. I could take it a lot of different ways.
So we'll end with looking forward. You just talked a lot about that. But first I want to just chat about one of the greatest golf experiences that I had. And it's in the middle of nowhere. So tell me about Scottsdale National Golf Club. So for people this is really an amazing place. So tell me about Scottsdale National Golf Club.
So Scottsdale National is a really, really cool place. There's only, you know, it was started by someone that I couldn't be happier to call a friend, Bob Parsons, who Bob started GoDaddy.
Amongst other great companies.
Really, you know, he has some great stories when it comes to it, and a special man, you know, Vietnam veteran, Marine Corps, and he wanted something that was just outright special. So he bought a golf course. It was 18 holes. He, you know.
Was it called Scottsdale National at the
time?
It
was called the Country Club of Scottsdale.
Okay.
You know, I don't know exactly the story. It was pre-me, but a lot of those members aren't there anymore.
Yes. They were Clarence Beak.
Is that nice?
Yeah, it was nice. It was nice.
And then he hired 2 unbelievable designers to create this short game facility, a par 3 course that is like insanely fun.
Yeah.
Maybe the most fun of anything I've ever played.
It was fun. Because even if you're having a bad day,
it's great.
Special.
It's great.
Okay.
They put lights on the golf cart so you can play at night, and another 18 that's special.
And what's the only rule? The only rule is just
don't impede anyone's fun.
Yeah.
Like Bob is a very, very straightforward guy, and he wants people to have fun.
And so very few members. I mean, there's members, but very few local members.
Yeah, there's like, I don't know, 10, 12 of us that live here in Arizona.
So be nice to Howard. I'm like one heartbeat away from knowing a guy at Scottsdale National. That's how I met you. So a friend introduced us.
Yeah.
And I think if I got introduced to you in '08 and started talking about what I was doing, you would have just laughed your ass off.
Or I would have left and been much more successful.
You would have laughed your ass off. You weren't ready to leave.
Followers.
You weren't. I don't know. You would not have been ready to leave. Because as much as like it was painful, you didn't know that the brain drain had started. You didn't. You might have been at the early understanding of it because you were interviewing people, but you didn't know that was a trend that was going to carry on forever.
I think that's fair. That's fair.
Yeah. So we meet. I come up to this place, and I think it's a special place, obviously. I've played a lot of different golf courses, I think. But I think the most interesting thing was the par 3 course. And so no one's broken. So it's 9 holes. The holes are the size. The greens are the size of this table. Yeah. And as firm as this table.
And
so
like
what's his thing that
Fridays,
he has going?
On Fridays, they stamp it up to like, I don't know, 800. And it's
like
impossible to break
Mars.
par.
Yeah.
And, he'll give out an award if anyone breaks par.
Has anybody broken par?
I don't think so, no.
Yeah.
Not on their first ball. And, a couple of touring pros that, by the way, the other thing, why your listeners probably know about Parsons is he started a golf club company called PXG.
Right.
Parsons Extreme Golf.
Yeah.
So
that's what it stands for?
Yes.
Okay.
So we have a handful of touring pros that are there all the time. And when they can't break par,
Yeah.
I'm not going to.
It's one of the most interesting. Well, I like to make fun of Phoenix, but I love the desert. The colors are great. Everything's great about the desert except the summer. But desert golf is like a special thing, and I think what he's done up there is incredible.
No houses is key. You underrate the fact it's random when you play anywhere nowadays. But with 600 acres and have no houses.
But so I'm trying to understand because he's got such big vision. GoDaddy is like a portal to real estate on the internet, and so golf is such a shrinking market. What was
passion?
So it's just pure passion play.
I think
it's not about making money.
You should talk to him one day. But I think he has 14 or 15 businesses, and it's purely passion. Definitely everything he does. As far as I know, and I don't want to speak for him, makes money, but that was, this was where he wanted to be. This is where he wanted to spend time. He wanted to hand select who he wanted to be with and create something that's special.
But you play PX. The product's great.
The product's unbelievable.
And the way he built the product's unbelievable.
The products,
yeah. So let's flash forward now. So you got this good life here.
Yeah.
You don't have to take crazy risk. What is it that you kind of intrigues you? And you've got 3 Gen Zers.
Yeah. So I have a son that's going to be a senior next year.
Mm-hmm.
I have a freshman boy, and I have a daughter that's in 5th grade.
Right.
So and he's off to college or whatever it is. Right now, I've had no issue staying busy, but if it sounds weird, that's my biggest worry.
Right.
Of the world is how to be around as much as I can for my wife and family, while still finding that passionate thing that I ran in every day. Yeah. And I can't tell you I've had the same adrenaline rush. I don't know if that has to do with the fact that I'm in my mid-40s and not my mid-20s.
Yeah.
But finding that next thing to jump me out of bed, I love it. But that adrenaline punch is
and what about crypto? Is there anything there that excites you? I know you're bullish.
Yeah, well, everyone, I had a bunch of people call me with crypto because it's a cryptocurrency technically, currency sales and do that. And 9 out of 10 of them I didn't like. The blockchain stuff is enthralling. It's super exciting. Now I think too many people were using it for the wrong reasons. Like you didn't need to put everything on blockchain, but certain things are built for it.
And what do you think is built the best? Financial instruments?
Yeah, I think a lot of them. Yeah, I'm talking to a couple of companies that are on top of the financial, and they're going to make the whole operation, confirm, trustless, just much, much easier. Much, much easier. I mean, that's what it's built for, is to make trade easy.
And what do you think? How do you think the banks see this? They're obviously talking one game and doing another. They're obviously taking it seriously, or no?
I mean, everyone always points to Jamie, talking or Buffett talking about Bitcoin. I think Bitcoin and blockchain are very different. I think if any bank that you look at that's worth their grain of salt has a huge blockchain team, has huge outside investments, has huge internal exposures to it, and they understand how beneficial it can and will be. And whether we'll see some M&A, whether we'll see some of the smaller ones die out because it's very capital intensive, whether we'll see the big ones really win out and push like internationally and push the traditional banks, I don't know. But I think it's real and it's here to stay. But the crypto side, a real smart. I made an investment. I'm an advisor to a crypto company in San Francisco, and he said to me that, Doug, I'm absolutely positively sure there's going to be a cryptocurrency worth $1 trillion. I just don't think it exists yet. And that's when Bitcoin was at like 18,000. So he wasn't just picking the bottom or whatever it is. So that was him conveying the value of blockchain and the value that's there. But a trade is about timing and having everything.
Are you
the right
long
way.
any Bitcoin?
Yeah, I have some,
long.
but not enough that's gonna
change your life.
Change my life.
So last up, Tesla. You drive. So you live in the future, even though you may not. I think you live in the future. In the sense that you kind of met me and quickly got into our world, and full disclosure, you're an LP in our fund and helping me out, kind of think through a few ideas around investing in RIA, et cetera, et cetera. So we kind of hit it off pretty fast. But I like to learn from our LPs and my friends, and I think you had an interesting take on Tesla. So I want to end with that. Is that you drive? Unlike Gary, who was just my partner, who's just on the show and drives a Tesla, lives with his Tesla, loves his Tesla, loves Elon Musk. You separate, and maybe it's because of your experience. You drive a Tesla, you love a Tesla, and you were long Tesla. Now you're not long Tesla.
Yeah.
So let's walk through why the trade stopped making sense to you. Meaning you love the product, but not the stock.
So I got one in 2013. I walked
so
off
you're early
the lot,
adopter.
Walked off the lot, bought the stock, and said, this is the next thing.
Because you tried the product.
I tried the product. They threw me the keys. They gave it to me on a Sunday.
In New York?
In New Jersey.
In New Jersey, yeah.
And a no-brainer. I ended up getting it a month later, and I'm on my second one. I think I put 90,000 miles on the first one. And eventually, let's say 2 years later, I sold the stock at a profit, and but lower than where it is now.
Yeah.
And I realized that at some point, at that time, I thought it was going to be 2021. Maybe it's 2023 or 2024 when every brand has electric. What I was in love with was the electric and the technology. So it was driving an iPhone. That's what I was doing. I was driving an iPhone. And the electric side, when you step on it and it flies. And then I realized, let's fast forward. I mean, wouldn't it be cool if I could go back to one of my old brands that I used to drive, whether it's whatever it is, you name it, when they're all electric? Wouldn't it be great if I could try them all? I'm not gonna really be so, loyal to Tesla. I'm gonna be loyal to all the cars. How about the 95% of people, the 98% of people that are still with their regular car waiting for it to get electric? So they'll have a tough enough time holding on to their own clients, let alone pulling people from BMW or Mercedes or Porsche or Range Rover when all of those are electric.
Yeah.
So
that's interesting. Assuming they don't get in, solar panels and all the other stuff doesn't work out. That alone could hurt them.
Yeah, just purely on the car basis, I don't think. Yeah.
And do you S&P index or do you pick stocks on your own?
Both. 90% of my exposure is in index.
Got it. Okay. And is there any stock that stands out to you that you love?
I mean, I could look at my wish list, but I don't know. I'd like to talk to you about this. Like you have exposure in ride sharing or whatever it is and all of this. And, I look at it as it's really expensive. A lot of these people, the world is going to be totally different. And then I always try to take an argument of why I wouldn't rather buy Google than buy Lyft or Uber or any of the other rides, the scooter companies that are still private, but you can get in on a secondary or whatever. If they have Waymo, but they also have a gazillion dollars they make in advertising and other companies, and they have all those economies of scale and data and all of that, I have a tough time every time Google dips not wanting to buy it, given their competitive advantages, versus another one. It would be interesting to see you kind of unpack that. It's not necessarily.
Yeah, I feel the same way about Google. No one knows how to value it, therefore I have just as good a chance. It's like looking at a startup. Even though it's a $800 billion company, I'd look at it as like a startup. No one really knows how to unpack it. So the odds that it's worth $2 trillion or $400 billion is anybody's guess. I think the odds of it being worth, $2 trillion in the world that we live in versus being cut in half means I'll stay long Google and buy the dips. Downside, 40%, upside 300%. Just because of what you said, the competitive advantage around data and will, and the fact that the founders still run the place. So I don't feel I have any edge there, other than I'd rather own that than the NASDAQ at some level. I think one of the most interesting companies to me right now, and I'm long the stock, is McDonald's, just because they're at the intersection of everything, right? They have leverage from they are everywhere, so they have distribution centers everywhere within 3 or 4 blocks of every human being in the country. They're in the process of upgrading all their stores. This is just the U.S., forgetting China, forgetting Europe, which are actually better in Europe. But it's a disgusting place, for 20 years, and now they're in the middle of upgrading everything. They have 24-hour food service with Uber Eats. You can't replace the Big Mac. If Uber and Grubhub and everybody wants to set up kitchens, they can't knock off the Big Mac. And it's hard to deliver a Big Mac faster than McDonald's could ever probably deliver it. So they have the product, they have the menu, they've lived through the fact that people want to eat what they want to eat. They can't just deliver a Big Mac only. And so I think that's an example of an ass. And, people look at it, I was talking about yesterday, and people, it's not growing its sales. Well, I don't think it's a sales play. I think it's a leverage play on technology and the fact that they have just a 24/7 menu that appeals and
they're jumping into the veggie burger thing, and some of
it'll
those
be easy. They didn't take any of the risk in veggie burger, but they'll get all the upside.
The upside because
they'll do it better than everybody. They have scale and distribution. If people want it, they'll eventually. So they become the Amazon of food. And they're the only ones that Amazon can't beat. So everybody's looking at their earnings and their sales and going, they can't grow. And I'm looking at it going, well, they're not going away. They've taken all this money to upgrade their technology. So now I walk into a McDonald's and I'm in a lot because I bike and I stop at weird places to grab a coffee or a burrito for $1. And I just look around and I'm like, I'm the dinosaur in a McDonald's, meaning there's like 8-year-olds ordering on the machine and I'm begging the one employee to take my order because I have a special order. Yes. And I don't even trust the machine because I'm like, want to talk to the human to place my order who's going to fuck up the order worse than the machine. And so I look at McDonald's and I go, they are, just like Domino's was a great play that I missed because they were actually Uber meets pizza meets app. McDonald's is Domino's times 1,000 because they have the whole menu. It's easier for McDonald's to offer pizza than Uber to get into all the foods. So I'm shocked that McDonald's hasn't offered a good pizza because. So
I haven't looked at it. What's the valuation like? Like, do you buy that on a dip?
I only have been buying on a dips, but I'm thinking of it's at all-time highs still, even in today's market, and I'm saying it's telling me something. Now, restaurants are doing well in general, so Starbucks, Chipotle's, McDonald's are all basically at all-time highs, so it's not on its own. But you threw it back at me, and I own it. It's in part of like the 8 to 80 group of stocks that I own. But I'm generally been a buyer of that on 20% dips. But I'm starting to think that it's in a world where everybody owns Google already. I don't think a lot of people own. Forgetting index, McDonald's is part of the index. But in terms of guys like us bantering about a stock that's a tech stock that's not a tech stock, and McDonald's could be a tech stock. Well, Uber Eats, the number one thing that kids see on Uber Eats is the Big Mac.
Really?
Yeah. So they have a lot, and it's not like Uber Eats the only thing that'll deliver a Big Mac. it's Grubhub, DoorDash. So McDonald's got all this free advertising from all the deliverers. They got to offer McDonald's as part of this. So basically, they've just increased yield, and that's not factored into that. So, for me, I try and look at – I can't beat the market. I agree with you. The indexing is the only way to do it. But it is fun to try and outthink a few ideas a year.
So the last sell-off that happened, the only stock I bought for different reasons than you were saying, but simplistic reasons, not valuation, not anything, was I bought Salesforce. And the only reason I bought Salesforce is I didn't know.
This is in December?
Yeah, I didn't know what they did.
Mm-hmm.
All I knew is every salesperson that had worked for me that I had hired that were under 30 over the last 5 years said they wouldn't be able to do their job without it.
Yeah, well, and I think what Salesforce has done best, because I don't use Salesforce, and I know a lot of young people who don't use Salesforce, and we're all looking for better tools. They've done a good job of acquiring and saving their behind, meaning whatever they can't do, they just buy their way out of. And that was the genius of Mark Benioff. So I think on dips, until they stop, until he leaves the company, I guess, and changes strategy, I think they've done that well. So that was a good buy on the dip. All right, so this is fun. Thank you for being on the podcast, and we'll have you back again. But that was a great conversation.
Thanks a lot.
Thanks, man.
Thanks for having me.